Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to yet another promising edition of the Forex Morning Mastery with Sheriff Daramola. It has been quite an interesting 24 hours actually, as we've been get to see some traction coming in favor of the US dollar, but the anticipation of the US CPI data coming in today is likely tempering with that momentum at this point in time, as majority of the market have fallen into a risk-averse outlook, waiting for further cues, probably a couple of hours into that data release to gain an insight into what to do for today. And of course, we are going to be here to review the current market structure from a technical standpoint to anticipate where price action is likely going to be for today. So in anticipation of today's trading session, I've conducted a comprehensive analysis on all of the assets on our watch list for today, where I'm very excited to share with you the new discoveries I have on the chart and how we can actually take advantage of any next potential move using simple parameters such as trend line, key levels, and of course chart patterns to gain valuable insight into the historical price movement of this asset. Well, so far this week we have been monitoring three financial assets, which include the GBPUSD, the XAUUSD, popularly known as the gold spot, and of course the USDJPY. And for those who are with me on both my TradingView and Telegram platform, you definitely have gotten an update on how we are going to be capitalizing on this trading opportunity for today. But for those who are not, never worry, we are going to be reviewing this right in the moment. But before we go into the details of what our expectations will be looking like for today, I would like to get some feedbacks right in the comment section as regards to the audio visual of the session. Please let me know in the comment section if the sound quality is quite good and the video is not freezing at all, as this will help me to know that we are all on the same page here, and if there is need for me to do any necessary adjustment, that will prompt me to do so. So thank you very much in advance, as I look forward to your feedbacks right in the comment section. Please, I need your feedbacks. Please do respond accordingly. So for those who are joining us for the first time, you are highly welcome. And in fact, I'm always glad to find newcomers in the house. You are very, very much welcome. And you might be asking, what is it that we are doing here? Well, as technical traders, we come here on a daily basis in anticipation of both the London and the New York session, where we come to, if we have any existing position, review them, see how we can manage them, and at the same time strategically position ourselves ahead of today's trading session. So this happens on a daily basis. Technically, the stream starts 8:05 a.m. UTC. So I encourage you to be part of the subsequent session, and in fact stay tuned in so that you don't miss out on any of the ideas we shall be talking about today. And in fact, the more time you spend with us, the better you get in understanding how things work here, and eventually be able to use the information you have gathered here to make your own independent trading decisions. So once again, you are highly welcome on board. So I see Eric Mudavadi. Good morning to you. How are you doing today? Glad to have you around. Thank you very much for your feedbacks. I really do appreciate it from your hand. So thank you very much, guys. And with that being said, let's dive right into our morning routine. And as usual, the first thing we normally do every morning is to check on the economic calendar. And for those who have been following me for a while now, you know how important this event is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns on the chart, hereby giving us valuable information that will make us position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. So on the economic calendar, we normally focus on high impact event coming in from the economic docket that affects the assets on our watch list. And for this week, we are going to be looking at the United Kingdom, the United States, and of course the Japanese economy. Now for today, hold on a second. I just saw here that this thing has reset to the next week. Okay, so for today, excuse me, please. So for today, Wednesday, September 13th, we have the, what's it called? Okay, so for today we have the Wednesday, September 13th, we have a series of high impact event, but basically it's the consumer price index. Now, for those who don't know what the consumer price index is, well, this index measures the inflation in an economy, impacting the purchasing power of consumer and influencing market expectations about central bank policies and interest rate decisions. And generally speaking, a high reading is seen as positive, and for the US dollar, of course, when the higher it is, the higher the inflation. And of course, you know, when the inflation is high, the Fed Reserve, the only tool the Fed Reserve has to bring down the inflation rate is by increasing their interest rate. And of course, when the interest rate is increased, this opens a positive window for investors to come in and bet on the US dollar. So the economists are projecting a 3.6% increase as against the previous month of 3.2%. So we're going to be looking forward to what the actual data is going to be like, after which we want to be using that to make an informed decision. However, it is important to note here that as technical traders, all we're going to be doing here today is to sniff through the current market structure to look out for patterns and structures that will support the idea of either buying or selling. So whatever the way the market participant anticipate this event will reflect on the chart as price action, and of course this is what we want to be looking out to give us a clue into what our next line is likely going to be. Then there is one more event that happened this morning from the United Kingdom economy, but it was not categorized as an high impact event, but it was categorized as a medium impact event. So I would like to show you what that is. Now we had a couple, I think a series of medium impact event from the United Kingdom this morning. One of them is the gross domestic product annualized for gross domestic product for month on month. This is not the annualized one. And for those who don't know, the GDP is a high impact event normally, and it measures the changes in the input for insight into the overall health of an economy, impacting investors' sentiment and influencing trading decisions. And it came in below expectations sincerely. The previous month was 0.5%, and economists were projecting minus 0.2, which is not that good actually, and it reveals a lot about the economy of the United Kingdom. And now the data came in way below the expectation, giving us a negative deviation of minus 1.40. This is not a palatable figure at all. Then we also have the industrial production, which gives us an insight into the industrial production sector of the United Kingdom, a major indicator of the strength of the manufacturing sector. And of course, a high reading should be giving us something positive for the pound sterling. But the same thing happened here. Figures came in just way below expectations here, way below the previous month, further emphasizing the nature of the economy in the United Kingdom at this point. But the manufacturing production came in a little bit higher than expected, giving us a mixed data sentiment in the market from the United Kingdom. So we are going to be looking at how the market has reacted to this event and what is likely going to be happening, especially as we anticipate the US CPI data coming in today. So with the informations we have gathered here on the economic calendar, let's dive right into the charts and look at things from a technical standpoint. So moving right into the chart, the first instrument we are going to be looking at today, of course, is going to be the GBP USD. Now, on the GBP USD, we have an interesting setup going on right now on this chart. And in fact, the price has moved the way we had projected yesterday. We shall be going into that details in a moment. But first and first here, I want to refresh our memories as regards to what we talked about yesterday, as we had a couple of parameters on this chart that we said we were going to be using to guide our decisions for this week. Now, one of these parameters is the key level situated at the 1.24500 area, and in fact we emphasize how the zone right around and above that key level had been a major determinant of buying pressure since last week Thursday, as we saw here that despite the strong bearish momentum, as soon as price gets into that area, we saw how sellers struggled to push price to the downside. And as a result of this, buying pressure emerges from this area to push price to the upside. And in fact, we had the breakout of that descending trend line for the first time at the beginning of this week right here. And immediately we saw this on Monday. One of the things we talked about was that we might likely be seeing price come back to retest the trend line that was broken, which of course happened yesterday. And you will see here that for about 4 to 5, 6 hours, we saw buy pressure resume around that zone we identified yesterday. And of course, we took advantage of a buy position, which moved about how many pips was that? Moved about 35 pips before it crashed again. When I woke up this morning, we saw that the position has been taken out at a worst case scenario break even. And I do hope you moved your stop losses accordingly. Like we always say here in this community, as soon as price moves significantly well, we definitely want to be moving our stop losses to secure the position. And if you had done that, you must have been taken out with a worst case scenario break even on that one. Now, in anticipation of today's trading session, what is going to be our plans and what are our expectations? Well, firstly, I would like us to run through my commentary this morning on the GBP USD. For those who are with me on my TradingView and Telegram platform, you definitely have gotten this update. But let's run through this for those who had missed out on that one. So this morning I stated here that buy positions have been closed at break even. Recall we said what we said about the significance of the price zone between the 1.24620 and the 1.245 for potential buying opportunities during our live session yesterday. We witnessed the first retest of the zone, raising the question of whether a second retest will provide another chance to buy. It's important to recognize that despite our earlier buy positions this week, a bearish trend has taken shape, characterized by lower highs, that was a typographical error, lower highs and reinforced by the descending trend line. Mixed figures from the United Kingdom this morning, that is the UK GDP data, is exerting downward pressure on the pound as it came in below expectations at minus 0.5%, despite the manufacturing sector expanding by 3%, surpassing expectation. At this juncture, patience is advised as we await further structural clues for potential trading opportunity with the impending release of the US CPI data. Now, let's go back into the chart and deliberate on this closely. Now, if you look at this structure closely, it's clear that price has been very, very bearish in this market, and not until the beginning of this week that we saw the breakout of the descending trend line. And in fact, price came back to retest the structure, and it appears price is going back again to retest a second time. So at this point, we need to be very, very careful, and the reason is this. One, we have a bearish trend established right now, at least since the beginning of this week. If you look at the structure closely, after connecting the series of lower highs since the beginning of this week, we have a descending trend line to work with, as you will see here. Now, this trend line here is going to be a point of reference, as if price continues to find selling pressure below this trend line, then it is very likely that we are going to be having the breakdown of our key level situated at the 1.245. And for those who are with me here in this community for a while now, you know how important and how we use our key level. When price breaks down that key level, then it's going to be a signal that we want to be getting ready to sell. Hereby, we look for patterns and structures that will support the idea of selling that asset. But as at this point in time, price still remains above that key level, so we shall see how the market will react to the structure. So for me personally, to sell the GBPUSD today, I would like to see a breakdown of the structure, retest of structure, then we can join that decline to the downside. So anywhere below the 1.245 and the 1.24620 level seems most appropriate to take some sell positions here. And in fact, if we are taking sell positions, our stop losses should be anywhere right above the 1.24940, which is right above that as descending trend line to secure that sell position. So we have about 35 pips thereabouts on that one if price action does break down that zone around the 1.245 and the 1.24620 level. So that is how we are going to be selling the GBPUSD today. We already have a trend, a bearish trend at least for this week, and sellers appear to be pushing price to the downside. And in fact, data coming in from the United Kingdom is not helping matters at all. So we continue to hold on to a bearish bias here unless price action breaches that descending trend line. Now, for me to consider buying the GBPUSD today, I would rather want to see a breakout of both the 1.25 and the 1.24940 zone, which interestingly shares a beautiful confluence with that descending trend line. And in fact, if this breakout happens, then we want to be shifting our momentum to an uptrend move. Remember, we had the breakout of this descending trend line at the beginning of this week, which gave us a sign that price might likely be going to the upside. But let's see how the market will play out around this area in the next couple of hours. So our center of focus right now is between the 1.24940 and of course that zone at the 1.25 area, where depending on where the breakout happens here or breakdown will determine where our next line of action will be. So these are my views here on the GBPUSD. It's a simple setup, a couple of levels and a trend line to guide our trading decisions for today. So we do want to be marking out those levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. I don't know if you have any questions as regards to my explanation. If you do, please let me know in the comment section, and trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever as we get ready to move on to the next financial asset. All right, so in the absence of no questions, I will take that as an assumption that I'll take that as an assumption that we are all good to go, and what I said so far has been quite explanatory. So with that being said here, let's move right into the next financial asset. All right. So the next asset here is my favorite, and that is the XAUUSD, popularly known as the gold spot. And in fact, we begin to see some interesting situation going on right now in this market, which of course I talked about in my commentary this morning on the XAUUSD. Now let's look at the structure closely and what led to the decisions we made so far this week. Now, at the beginning of the week, we saw that the price moved. We had a very strong bullish momentum. Remember, price started the week at around the $1,916.50 level. And in fact, we saw a very strong impulsive move. And as soon as price got into that 1,928 area, we begin to see some selling pressure. Well, we are not surprised at that one because if you go to as far back as the beginning of this month, we saw how that zone had been a strong selling niche for participants in this market. And in fact, what we were looking out for was a significant breakout of that area to give us signs that we are likely going to be going bullish. But instead, what we saw was the selling pressure. In fact, we had a couple of rejection of that zone, pushing price to the downside. And in fact, remember, at the beginning of the week, we had a buy zone around this area where we were looking forward to the end of that retracement of that impulsive leg to inside the uptrend move. But unfortunately, things did not work as planned, as price we bought at that point, but we were taking out at stop loss on that one. So we started the week on a negative note as price took us out in a loss on that one. Then yesterday we anticipated the breakdown of the 1,916 and the 1,915 area to capitalize on a bearish move. And of course, we took advantage of that move as we saw this situation here. And in fact, if you still have your sell position running right now, you will currently be in about 47 pips in profit at this point in time. In fact, right now, if you're still in a position right now, I will be advising you to move your stop losses on all sell positions to your entry point right now. Let's secure this position as anything could happen from this point in time. Now, with a well-secured position, what is going to be our plans for today? What are we likely going to be doing? Are we still having a bearish setup that will push price to the downside, or are we likely going to be seeing a reversal pattern for today, especially as we await the US CPI data coming up later in the day? Now, before we go into the details here, I would like us to run through my commentary this morning as regards to what our plans are on the XAUUSD. And for those who are with me on the TradingView and Telegram platform, you must have gotten this update. So this is how we have been managing our position since the beginning of this week. Now look at what I said here this morning. I said ensure your sell positions are well secured. Although the weekly trend still maintains its bearish outlook, that is since the beginning of this week, the current market structure is looking very bearish. And there has been a recent development in the last 18 hours, which makes brings a new twist to the current market structure. Price actions seem to have encountered support around the 1,909 zone, causing bears to face difficulty in pushing price lower. As all eyes are now on the upcoming US CPI data release, with economists forecasting an increase to 3.6%, we'll closely monitor how market participants position themselves ahead of this event. Keep in mind that the descending trend line remains a crucial reference point for today's trading decisions. Now let's go back into the live chat and see what we are talking about here. Now if we go into the 1 hour time frame, which of course is our execution time frame, the first thing you will observe on this chart is that descending trend line since the beginning of the week. And after connecting the series of lower highs, we have something to work with. And of course, you know how we use our descending trend line in this community. As long as price remains below the descending trend line, we will continue to look out for patterns and structures that supports the idea of selling that asset. However, something interesting has been going on here in the last 18, 19, 20 hours now in this market, as you would have noticed that since price tested the lowest point for this week at the 1,909 area, we have been noticing buy pressure around this area. And what this simply tells us is that sellers are finding it difficult to break through that area. And when we begin to see buy pressure or a platform that is negating selling attempt, it is likely going to be we might likely be seeing the build-up of a bullish momentum anytime soon. And if we take it a step further to look at what is going on here from a structural perspective, you'll see that following this impulsive move to the downside, we have this first touch. Price came back into the 1,915, which happens to be our key level for this week. Then we saw price come back again into the 1,909 area. Price was unable to break down the previous low, giving us clues that buyers are gradually gaining momentum. And if you look at this closely, if price continues this way, we are likely going to be seeing a reversal pattern in the form of a double bottom structure. Now, if this is going to be the case, the next thing we want to be doing is to have a neckline that we shall be using to validate this reversal pattern. Now, we have a neckline which coincidentally lines up with that $1,915 area. And in fact, I think if we want to be more precise here, let's bring out our line chart. You will see that the neckline is somewhere around here. Really, that's around the $1,913.50 area. So let me label that area, as we might likely be using this one as a yardstick to guide our decisions for today. So I think it's better like this. So we shall be looking forward to the breakout retest of the zone to incite an opportunity to buy. Now, for us to buy here, I would rather want to see a breakout retest of the zone for confirmations before jumping into any position at this point in time. And if this continues, it might likely lead to the breakout of that descending trend line, which will be the first time price will be breaking out of that trend line to give us a very beautiful opportunity to join an uptrend move. And if that is going to be the case, we shall be looking out for buying opportunity and feel comfortable with our buy positions anywhere above the $1,913.50 level. And let's ensure that we have our stop losses in place. And of course, we do want to be giving enough room for price action to break. So in this case scenario, a 45-50 pips stop loss seems most appropriate at this point in time. Now, this is how we are going to be looking out for buying opportunities. Now, when price climbs and comes to the upside and gets into the zone, please let's ensure that we move our stop losses accordingly to lock in that position. When price gets into that area around the trend line, it is very important we secure the position, because anything could happen around that area. Remember, the trend for the week is still looking very bearish, and for us to feel comfortable in a buy position is we want to see the outright breakout of that trend line for us to feel comfortable in a buy position. So as soon as price gets into that area, let's ensure we move our stop losses, secure the position, and wait to see how the market participant will be reacting to that confluence to decide if we are going to be adding more buy position to our existing trade or getting ready to sell. So that is my view there on buying the XAUUSD for today. However, if price continues to the downside and then breaking down the 1,909 level retest of structure we want to be looking out for selling opportunities here. So this is how we are going to be joining a bearish move here. Remember, we've moved our stop losses, secure the current sell position. Let's see if the market will break down the 1,909 to incite a bearish move. So below the 1,909 is an area I'll feel confident adding more sell position. So a breakdown, scale down to the lower time frame, retest of structure will confirm that move. But if you have a sell position running and you're profitable, then you can afford to have a sell stop order below that structure to capitalize on the next move. So that is that on the XAUUSD for today. I don't know if you have any questions. If you do, please let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next assets on our watch list. And you can as well use that time to mark out these levels on your chart, as we shall be needing them as a reference point to guide our trading decisions for this week, for today, sorry. All right, so in the absence of no questions, I want to assume we are all on the same page. So we shall be moving right into the next assets on our watch list. So the next asset on our watch list for today is going to be the USDJPY. And in fact, in the last 24 hours, we've had a buy position running, and it appears that the buyers are struggling at this point in time, so we are going to be looking at that. And don't forget that before we started buying yesterday, we saw we had the sell position initially at the beginning of the week, which we saw a very strong engulfing bearish candle at the beginning of the week, which was as a result of the hawkish comment from the Bank of Japan's governor, Ueda, who mentioned that the Bank of Japan is likely going to be dropping the monetary policy. You know, the Bank of Japan has placed a minus 0.1% interest rate on the Japanese yen since, I think, since last year. And this variance has not been helping the yen at all, because the wide margin between the yen and the US dollar is so wide that investors find it profitable to invest on the US dollar against the yen. And as a result of that, we've seen how the yen had reduced in value drastically throughout the course of this year. Now, the comment at the beginning of the week incited some bearish sentiment in the market, as a lot of participants in this market had to close in some of their position due to that remark, not to get caught up in any scenario that will incite some crash at this point in time. Now, yesterday we talked about this bearish momentum. We saw the breakdown here, and I talked about coming to join that move to the downside. So we saw the breakdown right here. So we were looking out selling opportunities anywhere around the 147 and the 146.680, and of course we had a sell position which did not last long, as price action went as far as about 60 pips thereabouts before we were taken out of that position. That is, if you had moved your stop losses accordingly, we must have been taken out in a worst case scenario break even on this one. And in the last 24-36 hours, we've noticed our price action had consistently found higher lows in this market, revealing the potentials of buyers and how buyers are trying to bring price and push price further to the upside. But even though we have this bullish sentiment in the market, there's still this fear in the market as to a potential intervention could happen anytime soon. And as you can see, though we have higher lows here, the bullish candles are not that emphatic as they used to be. So it gives us a little bit insight into the dilemma in this market at this point. And if we have the US CPI data coming up later today. This might likely give us some beautiful traction in that regard. Now, we had a buy position here triggered yesterday. As we saw, we anticipated this. And in fact, if you had missed out on that opportunity, the market came back to retest the structure a couple of times and in fact, respected that ascending trend line. And if you still have your buy position running at this point in time, you will currently have about 26, 27 pips running in profit right here. So the first thing I would like to say here is, considering the continued selling pressure around the 147.400 area, we do want to be moving our stop losses right now. I will be suggesting that the entry point around the 147.00 area seems most appropriate to lock in this position. So with a secured position now, what is going to be our plans for today and what is our expectations ahead of the US CPI data? Now, I shared a commentary today on my Telegram platform. Remember, I didn't do a publication on this asset where I talked about the potentials of sellers around this area as we saw selling pressure resume around the 147.400 throughout the Asian session today. And for me, this is a sign that we might likely be seeing a bearish momentum trigger at any point in time. But one thing for sure here is that we are going to be using this ascending trend line we spotted yesterday as a yardstick to guide our trading decisions for today. Now, how are we going to be using it? Of course, when price remains above our ascending trend line, we want to be looking out for patterns that support the idea of buying. So in that regard, we shall be looking out for opportunities to add more buy positions at the breakout retest of the structure to the upside. In fact, I would like to see price take out all the sell positions here before I jump into a position. That is, I want to wait for a breakout retest of structure on my lower time frame before jumping into any buy position here. Remember, we are within a very sensitive zone right now, and I'm not very comfortable joining any bullish momentum without any confirmation on this current market structure. Now, let's zoom into what is likely going to be happening today based on what we saw since the beginning of the week. Now, the first thing first here is that impulsive move we saw at the beginning of the week, as you will see here. And in fact, I would likely consider this bullish momentum to be a retracement of that impulsive move, where the breakdown of this ascendant trend line is likely going to be inciting a downtrend move. And if a breakdown retests Apple, we might likely be seeing a strong bearish momentum. But I know that the market participants are looking forward to the CPI data today to give a clue into what is going to be happening. And if the CPI data comes beyond expectation today, there are chances that the US dollar will rise. And the reason is simply because the higher the CPI data, the higher the chances that the Fed will want to increase interest rate again this month. And if that is going to be happening, a lot of participants will be investing in the US dollar to capitalize on that interest yield on that asset. So you can see we are looking forward to a major significant factor today. And coupled with the technical structure we have here, let's see how the market would react. So personally, I want to be looking out for selling opportunities at the breakdown of the 147.00 area, but there are chances that we could have an opportunity to sell even before the breakdown of that structure happened. And that is why we are having this trend line as a yardstick. So if a breakdown retest of the trend line happens, we are likely going to be selling even before the breakdown of the 147 happens. And in fact, if you look at that structure, we have something here that we can use to guide that decision, and that is the 147.250 area, which shares a confluence with our trend line. So I would like to give this a different color here, and then let's label it 147.250 level. So we want to be marking out these levels on our chart and using it as a yardstick to guide our decision today. So if price action ever breaks down the 147.250, then let's wait for a retest of structure, confirming that sellers are gradually gaining momentum and that buyers are finding it difficult to climb back above that ascending trend line. Then we could sell, then have sell stop orders below the 147 and the 146.680 to maximize the potential of this bearish move. Things are looking very bearish here at this point in time unless price action significantly breaks out and retests the 147.40 area. So for today's trading session, our center of focus is basically between the 147.400 and the 147.250. So let's see how the market will react to the zone, and trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates on what our expectation is going to be like. So it's on this note I would like to call it a day here, but let's see if there are any questions whatsoever as regards to what I've explained so far, and if there are, please let me know right in the comment section. So I will take some time out before I draw the curtain for today. All right. Okay, so in the absence of no questions, I want to assume that we are all on the same page here. So we've been able to talk about three assets today, which we have been monitoring since the beginning of the week. And in fact, we've been doing pretty well, though price is still not very emphatic at this point in time due to the anticipation of the high impact event we're looking forward to for today and tomorrow. And as a result, the market has been going through a consolidation and indecision phase right now. But one thing for sure is that we are going to be listening to the structure to decide what our next line of action will be. And trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. That reminds me, for the XAUUSD live window, which will be coming up about 5 to 10 minutes into the New York session, I have the link right now. I'm trying to drop it in the comment section, but it's not working. Or I think it should come up anytime soon. You want to click on that link, click on the notify me button so you will get notified as soon as we come online. And I'm sorry for yesterday, the XAUUSD live monitoring window closed abruptly, and that was due to some technical issues I was unable to resolve yesterday. The team tried, but nothing was able to come up with. So but I hope today will be better, and so let's see and let's make that session an exciting one. So on this note, I wish you all the best of luck, and please don't forget to click the like button. Please, your likes are very valuable to me, and it also helps the YouTube algorithm to push the video to a wider audience of traders that will find this content beneficial to them too. So thank you very much, guys, and I look forward to seeing you right in the comment section of both my trading view and Telegram platform as we continue to monitor price action. Do have a wonderful and beautiful day, everyone. Bye-bye.